Hey guys, welcome back. It is great to be back in Texas, and sorry for not dropping some videos over the last 2 days. I think it's probably fair to say that a significant amount of travel in a short period of time got the best of me. But I hope you're having a great weekend. And this break did give me a chance to reflect over the tape that we saw on Friday, that we saw across the entire sector this second half of the week, particularly looking at the memory sector and the tech sector after Micron dropped their print onto the street. And I think on this channel, we have talked about the memory wall just being an engineering problem in the AI infrastructure build out, which put the memory companies like Micron, SanDisk, Western Digital, and Seagate right at the epicenter of the AI infrastructure build out. And it showed just the importance of this sector overall. Well, I think what we saw on Friday and Thursday and Friday of this past week, it shows us that not only is the memory wall an engineering problem, but is becoming an economic problem for the market, because it is expected now that AI data centers will consume roughly 70% of the premium memory supply in the market by the end of this year. And that leaves only 30% left over of premium memory for consumer electronic giants to fight over to try to deliver their products to the market. And we saw the reality of that on Thursday when Apple and Microsoft announced that they are forced to raise prices now because of the memory tax. And what happened after that is what I want to focus a bit on this video. Is we saw this cascade of events after those monster companies, those titans in Apple and Microsoft made those announcements. How did it impact their stock? But more importantly, how did it spill over into the memory companies on Friday? We saw huge moves in the Korean market. We saw the index have to halt trading on Friday because their two titans that make up 50% of their index, and Samsung and SK Hynix, were just violently selling off. And that spilled over into the U.S. market on Friday as well. So I want to dive into those actions, that cascade of events that we saw after Apple and Microsoft announced that they are forced to raise prices because of the memory tax. And I want to just kind of dive into it overall and break down the consolidation that we saw across the memory sector as well. What did it mean on Friday when it opened up after we had massive moves on Thursday due to the Micron's earnings that they dropped in the street? But what did we see Friday? What did we see across the memory sector overall? What impact did it have on Micron, SanDisk, Western Digital, and Seagate on Friday morning? So we're going to dive into that as well, look at their performance, and particularly we're going to look at why did the HDD titans in Western Digital and Seagate, why did they get hit harder than the rest of the sector? Why did those drop down by double digits on Friday? So we'll dive into some of that as well. And then ultimately at the end of the video, I'm going to give you my playbook for what I think this sector will do. And the opening bell rings tomorrow overall. And what do I think it'll happen in this kind of week as we lead to a holiday on July 4th. So let's get into the tape. Let's dive into all those narratives that I mentioned. But if you haven't done it already, make sure you hit like, make sure you hit subscribe to the channel, guys. Thank you for all the support. We're up over 31,000 now, closing in on 31,500. Let's see if we can get past that with today's video. So if you haven't done it yet, make sure you subscribe to the channel. All right, let's get started. Let's take a look at the impact that we saw just with Apple overall and the memory tax and the impact on that and the announcements that they made. So Apple shocked the market by announcing price increases of 15 to 25% across the board for MacBooks and iPods. And then later that day on Thursday, we saw Microsoft follow suit by announcing price increases on their Xbox consoles. The market's reaction to both of these announcements, it was immediate and it was violent. Let me pull up an article from Barron's and we can just show you the impact that hit Apple. And clearly see Apple suffers the worst day in over a year. Price hikes and those announcements are just the latest sting. We scroll down, you can see Apple dropped by 6% on Thursday. It closed that day at just over $275 a share. It was the largest percentage decrease since April 4th of 2025. In fact, they were the worst performer in the Dow Jones Industrial Average on Thursday. And just put some context on that. We saw Micron drop their print on the street at the end of the day on Wednesday. We saw a huge carryover for not only Micron, but many tech companies because it validated the AI infrastructure build out. But the memory tax that hit these consumer giants, the cost of memory, and the fact that they couldn't shield consumers from these price hikes anymore had an impact on these companies overall. And guys, it had an impact the next day across the board on memory companies and many other tech sectors as well. We'll get to that in a moment, but I want to lay out just some of the changes. Real high level, you can see that Apple had to increase their MacBook Air by $200, their MacBook Pro by $300, but even their MacBook Neo. And remember, this is a lower priced item that was brought to the market to compete against Dell and Lenovo. They had to increase by $100. It doesn't feel like a lot, but it is a shift in their strategy overall. And I think it just shows you the impact that memory is having across these electronic companies, the impact overall that it's having on their products that ultimately are being passed to the consumers. If I scroll down, you can see Microsoft's same deal, right? Microsoft had increased their 512 gigabyte Xbox by $100 and their 1 terabyte by $150. And this is on top of an increase that we already saw in October of last year. They went on to say that, unfortunately, console storage and memory prices have increased by more than 2.5x. And we expect another doubling in the fall of 2027. Microsoft, they said that in their press release. The entire consumer electronics industry is struggling with the current component crisis, but the effects are particularly hard on consoles. So this is the environment we're seeing right now with electronic companies. And the reason we're seeing it get hit so hard and why Apple had to aggressively increase their prices is because consumer tech has just been hit with what institutional desks are calling the data center consumption cliff. We know that the AI infrastructure boom has triggered a massive reversal in the memory market. But AI data centers right now are projected to consume an unprecedented 70% of the global premium memory chip production by the end of this year. That means that the electronic giants like Apple and Microsoft and others have to fight over a depleted supply. That 30% that's left over, they have to fight over that to ensure that they can deliver their consumer goods to the market. Inside the industry, analysts are calling this supply shock Ramageddon because we have seen conventional DRAM contract prices skyrocket by nearly 98% in early 2026. But listen to this. There's another spike of about 58 to 63% that have locked in this quarter alone in DRAM contract prices. So we're seeing now memory and storage have suddenly warped from a standard 15% bill of materials within a premium laptop. They have jumped now to 35% of the bill of materials for a premium laptop. That just shows you the impact that Apple and other manufacturers have to deal with the rising costs of memory products overall and the pricing power that Micron and others have in this marketplace. So think about what's happening here. AI isn't just creating winners anymore. It's beginning to create losers in the market because every dollar flowing into a premium AI memory is a dollar that a consumer electronics manufacturer has to fight harder to secure. That's why this story has become macroeconomic instead of just simply technological. So let's jump over and take a look at how this price increases from Apple and Microsoft, the impact that it had on the Korean exchange. So the fear that hit the US markets on Thursday, it acted as a spark that set the South Korean index on fire on Friday morning. Let me pull up that article from the Wall Street Journal and we can walk through exactly what happened. And the reason this has context, we know how connected the Korean market, that memory market is to the US market. So when we saw them halt trading for the KOSPI, and because of the impact we were seeing with SK Hynix and Samsung, we knew that was going to carry over the Pacific to the opening bell on Friday in the US market, and we were going to see an impact in the US players as well. And it's exactly what we did see. But you can see in the article, the South Korean stocks tumble triggered a second trading halt this week. Remember, they stopped it in the beginning of the week as well with some announcements around it. Remember, SK Hynix was going to ramp down high bandwidth memory, which I showed you in an article was just a misinterpretation. They were just going to kind of optimize their strategy and shift more towards DRAM versus HBM. But we saw some other concerns around supply glut as well. But we talked about how that supply was not going to impact market until many years down the road. So we saw them halt their trading earlier in the week. They halted it on Friday as well because of the impact we were seeing within those two companies because they make up 50% of that index. But you can see South Korean shares slumped more than 8%, prompting regulators to halt trading second time this week. The KOSPI, it tumbled 8.1% on Friday afternoon, erasing Thursday's gains as investors became concerned that the rapid growth in profits of chip manufacturers that supply the AI industry could top out. Regulators, they suspended trading in an effort to steady the market because they needed to steady their market because SK Hynix was down by over 9%. Samsung was dropped down by over almost 8%. Those two companies, they represent 50% of the index, as I mentioned. So we saw this impact in the Korean markets. We knew it was going to spill over into the US, but we have to remember a couple of things. We know that there is shortages in conventional DRAM. That's exactly what Apple and Microsoft were talking about as well. We know that SK Hynix is kind of shifting their strategy, and they're going to deliver more in the DRAM space because they want to optimize their margins overall. And we're seeing DRAM right now. It has more than 15 points. The margins are actually 15 points higher than premium high bandwidth memory. So that's why they're shifting capacity into that space. We covered that in an article earlier this week. Well, we also know that all three memory makers, and SK Hynix, Samsung, and Micron, they're running the global market incredibly tight. They're working very well together to ensure that pricing power stays firmly with the manufacturers, with the sellers overall. To prove it, we saw Samsung, they answered this panic that we see in the market by announcing a monstrous $42 billion share buyback plan. They want to aggressively defend their equity floor. Even bigger than that, SK Hynix is officially moving forward with its plans for that massive NASDAQ ADR. They actually announced their date. So on July 10th, their listing becomes live and we can buy shares of SK Hynix here through their ADR in the US market. They are aiming to raise up to $29.4 billion. So why are they coming to Wall Street? It's because by introducing a $29.4 billion pure play AI memory option directly into the market, it challenges the scarcity and premium of the US listed equities. It forces global capital to re-rate the entire memory sector from a cyclical commodity to an indispensable, high-valued infrastructure player. And the street is reacting. We saw the reaction to this. We've seen a number of price targets from Micron since their earnings, but we just saw a new one as well. With Bank of America, they set their price target for Micron at $15.50. And we saw Jefferies just aggressively maintain its buy rating of SanDisk. It skyrocketed its price target from $1,400 all the way to $3,000 a share. So let's jump over. I want to take a look at just the impact that we saw on the market. So we saw Micron go down by, like I said, almost 7%, lost $81 a share. In the after hours, it's aggressive. It's $1 increase. So it's essentially flat. I want to keep my eyes on the pre-market. We'll see what happens tonight as we start to move that direction. Let me refresh and see if we can get any updates overall. So we'll keep our eye on the pre-market, but Micron is still sitting at $11.32 a share. We know 52-week was up over $12.55 a share, so it's really healthy. We got up over that 1,200 mark, kind of working our way to 1,500. So a little bit of a healthy kind of consolidation and a reset for this stock. But let's see what we saw across the rest of the memory titans. SanDisk down by 10%, 10.5%. It gave back $244 a share. We see in the after hours at $18, so it's about a 1% increase as well. Very modest. We'll keep our eyes on this as well. We do see the 52-week high that we set last week was $23.54 a share. Really healthy. If you look across that range of 52 weeks, from $40 to over $2,300. It's kind of wild when you look at that with SanDisk. Just shows the importance of this company into the market. Western Digital down by 13%, so it gave back about $89 a share. Again, we see in the after hours kind of a bit of a stabilization, stopping that kind of sell-off. Very modest, 1/3%, $1.79 up, but it's at $5.88 a share overall right now. And finally, Seagate. We see Seagate was down over 12%, $125 back on the board. After hours is about $2 that came back to the stock, about 1/4% overall. So we are seeing what we saw on Friday was kind of a broad, I would say it was a broad sell-off across the sector. In fact, I think we saw the semiconductor sector fall by 11%. So that concern definitely came across the Pacific, hit the tech stocks, it hit the memory sector overall, it hit companies like Micron, SanDisk, hit AMD, Intel, many others. This was a contagion effect. But now let's talk about what actually caused our pure play hard disk titans, those powerhouses in Western Digital and Seagate, to get completely obliterated in the afternoon session on Friday, because this was not a demand-driven failure. It was a mechanical-driven sell-off. And let me show you why. Let's first take a look at the volume velocity or the volume dynamics that we saw on Friday. Because if I pull up the historical table, and this is Western Digital we'll look at, know that these statistics and these facts are very similar with Seagate as well. But we're just going to take a look at Western Digital. If I scroll down here and you can take a look at their historical kind of volume movement overall. If we just focus in on, let's say, June 10th, 11th, 12th, in that range, you can see historically Western Digital's volume was around, 5 to 6 million shares overall. It was trading in that range consistently. You can see in the beginning of June, even if I scroll down further, you see once in a while it'll pop, but most of the times it's 5, 6, 5 million shares overall. But look what happens as we get towards Friday's close overall. Look at the volume on Friday for Western Digital. It exploded to 23 million shares. That's 4 times the historical average that we see with the stock. Seagate was the same way. Their volume tripled to about 9.3 million shares. But Western Digital's movement was significantly more exaggerated. You go from 12, and 11 million shares on Thursday to doubling it on Friday, but it's 4 times their average overall as well. So why did the big funds unleash this level of volume right before the close on Friday? It's because, in my opinion, Friday was the final weekend we have for the month or the end of the quarter overall. And I think this triggered a bit of an institutional portfolio rebalancing. Multi-asset funds systematically trimmed their massive year-to-date winners and keep their portfolios aligned. And when those automated programs looked across their holdings and they saw the runs that Western Digital and Seagate had recently, they stood out like giant targets. If I jump over here to statistics for something else for Western Digital, which kind of blew me away when I looked at this chart overall. If you just start in the first line and look at their market cap, you can see what I'm talking about with the winners that I'm saying, where these algorithmic programs or these fund managers looked into their assets to say, where could we trim positions? It's in companies like Western Digital and Seagate, because Seagate had a very similar market cap expansion that we see with Western Digital. It went from 14 billion market cap in March of last year to over $200 billion. That's a massive jump. And look at their price to book ratio from an historic perspective as well. That third line from the bottom, you can see a 1.16 in March of last year to a staggering 20.88 price to book overall with Western Digital. Seagate's expansion was just as astronomical. Their market cap rocketed from 18 billion in March to over 200 billion as well, just about 204 billion that we saw where it stood in June 26th. Their trailing PE got stretched to a towering 85.4, and it pushed the price to book ratio to an unfathomable 185.9 for Seagate. So what we're seeing across the board with both of these, when you see a physical hardware operator's validation get stretched that tight, it creates a massive liquidity air pocket underneath the price. The pension fund managers and institutional desks use that morning macro tech weakness as perfect cover to aggressively harvest profits, getting right through major technical levels and triggering automated quant algorithms to aggressively short the momentum into the close. But for long-term investors like us, I encourage you to kind of look down at that PEG ratio, the 5-year expected ratio that we see on the screen there, because even with that run that we've seen with Western Digital and Seagate, if you look at the PEG ratio, you can see Western Digital's 5-year PEG ratio sits at a 0.52. Seagate's is at a 0.62 because both of these stocks are comfortably under the 1. The data tells us that once this mechanical, calendar-driven volume flush clears out, the exponential earnings growth backing these AI storage boom companies, it remains entirely intact. This wasn't a structural shift. This was an artificial liquidity extraction that hit the sector, but particularly hit these HDD players hard on Friday with what we saw when they dropped by 12 and 13% respectively. So let's look out at the week ahead. How do we navigate the open when the bell rings on Monday morning? What impact do we think we'll see across the entire memory players, all Fab 4, the memory titans that we follow on this channel? But first, I want to show you an article that I teased earlier in the video when I said we can probably anticipate Apple's next move. So this article got pulled up on investing.com, and you can see Apple seeks U.S. approval to buy memory chips from China's CXMT. If I scroll down, you can see Apple is lobbying the Trump administration for approval to source memory chips from Chinese manufacturers like CXMT. And to be fair, Apple is not prohibited from buying chips from CXMT or the fellow Chinese manufacturer YMTC, but both companies, they do carry a bit of reputational risk because they are listed on Pentagon's Chinese military company list. And so they carry a reputational risk, even if they're not generally prohibited for commercial transactions. But we know, if you look at the next paragraph, that Apple desperately needs to diversify its supply chain as tighter industry supply and strong AI-related demand push up DRAM prices. So think about what's happening in the background here with a company like Apple. We see the impact of the memory tax because they are willing to face intense congressional opposition and risk partnering with a blacklisted company just to ease the financial pressure of the ongoing global memory supply crunch. We see that the buyers like Apple and Microsoft, their margins are bleeding right now because the core memory manufacturers and sellers like Micron, SanDisk, Western Digital, and Seagate, they hold all the leverage. So when we move over to this week, and what should we expect to see, let's say with Micron and SanDisk, I would say we should not let the short-term fluctuations shake our core conviction in these stocks. The structural floor beneath Micron and SanDisk remains ironclad. Major financial institutions and players are driving higher price targets for these companies. So I believe institutional desks will be aggressively using early week choppiness or any consolidation we see with these companies as an accumulation runway ahead of the July 10th SK Hynix NASDAQ ADR listing. Now let's talk strategy for our pure play hard disk drive powerhouses in Western Digital and Seagate. Friday's brutal afternoon flush has created a classic near-term technical rubber band effect in these assets. Because their high beta selling was entirely mechanical on Friday, they have drifted deep into an oversold intraday territory. If you're a short-term momentum trader, you must expect ongoing volatility. Watch for a sharp early week relief rally as the market makers' options data resets, but do not chase the initial green candles blindly. If you're a long-term position builder on this channel like I am as well, here is the execution plan for all of us. Look past the daily price fluctuations and focus entirely on the massive valuation floor that is anchoring both of these companies. Remember that Western Digital is sitting on a forward peg ratio of 0.52, and Seagate is sitting on a peg ratio of 0.62. We know that any peg ratio comfortably below 1 proves that the future earnings power generated by the agentic AI data boom is scaling fast enough to justify this multi-bagger runs that we've seen with these companies. So for the week ahead, with regards to our HDD, our storage titans in Western Digital and Seagate, I do anticipate continued choppy consolidation. We are looking for the institutional distribution volume to dry up and for the options delta to normalize. The structural thesis, though, with these companies around agentic and physical AI requiring massive and persistent storage is completely unchanged. So if the broader market provides a deeper pullback in Western Digital and Seagate, you're not looking at a fundamental breakdown. You are looking at an institutional sale, a great entry point for some of the most essential hardware in the AI stack. So continue, as we move forward into the week, I would say continue to stay defensive on your positioning, on your sizing overall, and let the quants exhaust their liquidation cycle before we deploy any fresh capital into the storage kings overall. That's my opinion, but you guys let me know, how did you play it? What did you do on Friday with the pullback? Was this an opportunity for you to enter in new positions on these companies? Did you sell and take some profits on Thursday? I'd love to know your thoughts below and what you're looking for as we move ahead. Also, let me know any questions that you have, any comments. I hope you enjoyed the video. I look forward to seeing you on the next one as well. Take care, guys. Have a great day.